Here, this is Bernhard Koepp from CJ Lawrence, wishing you a happy new year. Well, look, for Americans, this has been a long night last night. I mean, the events that we all witnessed yesterday on Capitol Hill and what the country's going through is certainly unprecedented. I mean, we finished 2020 as Wall Street practitioners and economists. We kind of thought that 2020 was the ultimate stress test for the economy. It was the ultimate stress test for our healthcare system as we navigate through the pandemic. But it seems like 2021 is now the ultimate stress test for our political system and our democracy. So, we are tired today. It's a new dawn. It's a new day. And we tried to digest the things that happened and that we saw on television yesterday. I think one of the key takeaways is that our institutions are strong. I thought the various speeches and declarations that we saw from our politicians and elected officials in the Senate and the Congress were quite impressive. Better late than never. So we look forward to 2021, hopefully for a year where calm comes back to the political process and cooler heads will prevail. So I want to just revisit some of the themes and some of the things that we've discussed in 2020 at the end of 2020 and give you an outlook, an update on the macro environment. So, we begin the year on a stronger footing, certainly than we had in the early periods of 2020. Our macro outlook remains very positive. The repercussions or the aftermath of the Georgia election, we got the surprise outcome that Democrats have taken both seats in the Senate, which basically makes the Senate a tied. So Republicans and Democrats have the same number of seats, with the vice president traditionally being the tying vote. So once the Biden administration take over, Kamala Harris as vice president will have the tying vote in the Senate. So this kind of opens a new legislative path for Democrats, certainly to more quickly move many of their policies through the Capitol Hill. So let's look at some of those, some of the pluses and minuses of that. In terms of the macro outlook, we still are forecasting roughly a 5% GDP growth for 2021. That is very constructive. If you think where we came from, um, it's remarkable how resilient the economy has been. We spoke about the digital part of the economy, but now we're also seeing this in the industrial part of the economy that there's a lot of activity. So, what are the pluses and minuses of a Biden administration and a blue sweep? Let's look at the pluses first. Um, Number one, stimulus. Look, we got a stimulus bill out in 2020. We expect more stimulus, so that certainly is additive to GDP growth. Uh, we made it clear that the base case of the U.S. economy in 2021 was 2% without any stimulus. So if we add stimulus, 1 to 2 trillion in terms of payroll assistance and so forth, that would add about 3 or 4% or even 5% to GDP growth. Um, so that's where we arrive at a 5 or 6% GDP growth rate for 2020. That is certainly positive. The second item is infrastructure. Certainly with a unified Congress, Senate, House, and Senate, it is more likely that we will get infrastructure type spending. If you think about infrastructure spending, it is quite additive to GDP in terms of employment and so forth. Um, The third point I think that a Biden administration brings is a move back to what we would call globalization. Certainly, the Trump administration has been more protectionist, has been more trade policies have been quite combative. We've had this battle with China. So we think we will move back to a more globalist approach to trade, which is more pro-growth. I mean, it's clear that tariffs and protectionism is detrimental to global growth. So those are the positives. So the negatives, um, there is certainly a worry amongst especially high net worth individuals that the taxes are going up. That will certainly happen. There's no way we can sustain this amount of spending, whether it's the short-term measures that we're seeing with the payroll um, or the infrastructure without any additional taxes. I think our best guess here is that that will not happen until 2022. So the Biden administration does not want to derail the recovery in the economy. We spoke about this before. So our expectation is that we won't see taxes changing until 2022. So what could happen here? Certainly, income taxes for high earners will go up, and it's still unclear whether capital gains taxes will also be included in that. There have been statements, certainly out of the Biden campaign, that capital gains taxes could go to the income tax rate. We think that's the starting point for the negotiations. As you know, laws are passed by Congress and the Senate and not by the president. So there certainly will be a negotiation about this. In terms of the Democrats' sweep on Capitol Hill, um, the margin is very slim. So I think we could still forecast at least that the any policies coming out in the next couple of years will gravitate more to the center. We do not think that we will get extreme type policies out of this administration just because they have a slight majority, so they have to negotiate with basically and come to the center. Um, One thing we've said in the past, something we're looking at very closely is the U.S. dollar. Certainly with the events yesterday, which have been viewed by every democracy around the world and all the leadership around the world. You've seen statements from all the various leaders around the world supporting the democratic process in the United States. Certainly, one of the things that we have to watch here is the U.S. dollar. Uh, we noted this last year. Certainly, if we are going to borrow these incredible amounts of money to build the bridge to get through the pandemic and get us to the point where hopefully by the summer of this year, where we can put the pandemic behind us, um, money doesn't grow on trees, and we have to watch the solvency of the United States Treasury, and the dollar is the canary in the coal mine here. If you look at a chart of the U.S. dollar, you've seen this high here. This was back in 2018. Or this low here. This is the euro actually against the U.S. dollar. So we hit a low here against the euro back in 2018, beginning of 2018, and then you had a strengthening basically of the U.S. dollar until about the middle of 2020, and then as you can see here, we've gone back to weakening our currency. I mean, this is something that helps our trade. Certainly, if we're exporting, we're trying to export our way out of this recession, this recession that was caused by the pandemic. Trade will benefit from that, but more importantly, capital flows overwhelm everything. So we are the reserve currency in the world, the US dollar. So if you have protracted weakness in the US dollar and you have lack of confidence in the US dollar for whatever reason, whether it's weak economic fundamentals or questioning the democratic institutions of the United States, that would be a problem. So the good news today, after what we saw in Washington, the dollar has strengthened again. So there isn't, so certainly the what we saw last night was a clear indication that the democratic institutions, certainly Capitol Hill, Congress and Senate, are solid, and that they are clearly showing to the world and to the American people that our democratic institutions are unshakable. And we expect that to continue going into 2021. Now, how does that translate into what we're doing in our portfolio? We talked about this debate between growth stocks and value stocks. Certainly, technology stocks have done very well last year, and that's because we got that acceleration of the digital transformation of the economy, and that was not because we wanted to do that, but because the pandemic required us to be digital to function. So we've had this accelerated process of cloud computing, but the interesting thing now is we're also seeing this in the analog, in the industrial side of the economy. So one of the shifts that we're doing in our portfolio this year is to add exposure in the industrial side, but that is also digital transformation. And to give you a couple of examples of that, so here I went to a PCR test the other day as a part of our to keep our employees safe here at CJ Lawrence. We try to test ourselves fairly often to see whether we have COVID or not. When I went to the hospital in Harlem just a couple of days ago, I got this wristband, and it's very interesting. So if you see the barcode that is on here, that is right here, and you see the company that does that barcode, this is Zebra Technologies. It's a very interesting company that we started investing in middle of last year. They are transforming the healthcare sector, the industrial manufacturing sector, and retail sector when it comes to supply chains and RFID tags and barcodes. So here's an interesting technology transformation story, Zebra Technologies, which is basically transforming all the things we do and making them more efficient. So we see that also in companies like Rockwell Automation, which has been a recent purchase in our portfolio. This is a company that is known, it's been around for a century. They are known for their robots. So if you look at pictures of car production, you see robots, these hands that basically make these mechanical hands that assemble cars. But the bigger part of Rockwell's business now is actually software to run the supply chains of these industrial processes. And that's the next wave, we think, of our opportunity that we're seeing. So we're fading a little bit the technology side, the cloud computing side, which has been so tremendously strong last year. We still like these stocks, so the Adobes and the Microsofts, these are, and the Autodesks, these are tremendous companies, or on the cybersecurity side, the Palo Altos. These are companies that have incredible earnings momentum still, and we like these, but we're basically moving to a barbell approach where we have the cloud computing side on the one side and the digital transformation stocks on the industrial side on the other side. And these include Zebra Technologies, Rockwell Automation, Jacobs Engineering. I mean, Jacobs Engineering had a tremendous move just the last couple of days, and it's really infrastructure. So it's quite likely that, certainly if you look around the New York area, our infrastructure expenditure and investment has been neglected for quite a few years. So there's quite a bit of catch up. That's going to happen now, certainly with the new administration. Other stocks that we've added recently, Fedex. Certainly, FedEx is known to everyone who uses Amazon and gets packages at home, but it's also logistics. If you do not in your business have basically um, figured out how to ship your goods and to do that efficiently, and there are big companies like FedEx that will help you do that, you can't operate in this economy. So look, we remain optimistic about the future. And, one thing that I've learned over the years is that investing is an optimistic endeavor. And if you're not an optimist, you shouldn't be investing. So we continue to invest in high quality companies that have sustainability. We are optimistic about our companies. We are also optimistic about the country. And what we saw yesterday was unprecedented. It certainly shook any American watching that yesterday, and certainly people from abroad who were watching this were shocked. But I think what we saw in the later hours last night was a coming together. So we remain optimistic that the best of the country is still ahead of us, and we remain optimistic about our portfolios. We thank you for your support. It's been a good year for CJ Lawrence, and we hope to continue to help our clients and to grow your money and to hopefully guide you through all of the various economic and Wall Street perturbations that we've seen aligning or that are ahead of us. Thank you for your support. If you have any questions, you could shoot me an email at bkoepp@cjlawrence.com or give me a call at 212-888-6300.